Hello, folks. Welcome to Market Trends. I'm David Russell, Global Head of Market Strategy at Trade Station. It's great to be with everyone. As usual, we begin with a few disclosures. It's great to be here. I'll share some information as well with you guys in the chat. It's great to be with everyone. Let's make sure all my sound and everything is set up correctly. Going to share this with you. Share the standardized returns of some ETFs that we do look at from time to time. We use for analytical purposes, essentially it's kind of as indexes and things like that. I will say I hope you guys are watching State of the Market on Monday, because a lot of things unfolding are things that have been kind of playing out on the weekly charts that we look at in that webinar on Monday at 2 p.m. Eastern. And they're playing out more or less as we had kind of been, illustrating some possibilities. I think it's important to realize here that the breakout in materials is very interesting. A lot of people were doubtful of it, and now here we are breaking out in the XLB materials ETF. We've been watching on the weekly basis. One of the big stories for us recently has been the shift back to growth. However, this information coming out of China in some ways is so massive and dramatic and sudden that we also have to be I think it's a lot of what I do, I'm looking at things over periods of weeks for trends to take shape. This has taken shape in a few days, so we want to be cognizant of it, but also not be overly knee-jerking to things that are very dramatic and very overbought in the near term. So if you go to tradestation.com and you click on Insights, it will take you to uh, our Market Insights blog. The Market Insights blog here has a blog post: Growth Makes a Comeback as Summer Ends. So basically, this is a rundown of the things that we're going to be, covering here in this webinar today. Let me just kind of adjust this. So, all right, now I also want to tell you guys that I am going to be in Miami the week before Thanksgiving at our at the Crossroads Summit, which Trade Station is sponsoring, and the website is crossroadssummit.com. There's going to be some really interesting speakers about the changing trends in the world of business and economics, and I will even be interviewing some of them. So hopefully you can make it November 21st and 22nd in Miami. Crossroadssummit.com. There's a link right here if you're interested. Also, don't forget you can sign up for the next State of the Market on Monday. Now, remember, we did this one on Monday, and that one we look at the weekly charts of the indexes. And like I said, some of the patterns we were looking at had kind of played out. I mean, if you look, I'm very quickly show you on TradingView. It's another chart I have here, but we looked at the weekly chart of XLB, for example, and we looked at this weekly breakout, and it's kind of played out. And then also things like we were wary about XLF getting stuck, and it has remained stuck. But now actually it's come down, and it has a 50% retracement of a recent move, and it went down pretty close, about 18 cents off the level we've been kind of watching. So some of the things happening now might also start to be, the kind of consolidation we were looking for in financials, and they're kind of played out. However, I want to just mention really quickly. Not looked at this in a long time, but Bitcoin here is something. I'm gonna go to a 2-day chart very quickly. But Bitcoin, people talk about October, as a lot of crypto enthusiasts say. I want to just mention here that Bitcoin might finally be showing some patterns on the longer term chart here. We have a higher low and a higher high. I mean, there's different lines you can draw and stuff on this, but to me, the thing that's interesting is it held this higher level here, and now it's kind of breaking above this level from late August. So, there is something here with crypto. There was a halving not that long ago. Crypto is really not my focus. However, I focus on things that, potentially have trends in them. And there are some things brewing here, I think, in crypto that we want to be aware of. Another thing I'm looking at in a big way is silver. We had done a trading view idea on it last week, and it is kind of pushing up towards some important long-term levels. I think it's important to realize when you look at silver here, they're looking at something that has some very long-term sort of chart potentials in place. And I'm not sure exactly to make of it at this exact moment. We had done a trading view idea on it last week. when it was down here about $2.50 lower. So at this point, I'm not sure exactly, but I want to point out that it is pushing kind of multi-year highs here. In fact, potentially multi-decade or decade and a half highs. Really since the beginning of around 2011 or 12, I think, on this one. So these are things that are brewing, and of course, it's interesting when you consider what is happening with the Chinese situation right now, because we had the Fed being more dovish than expected. We have basically, it was an interesting note from ECB from HSBC this week that said the European Central Bank could very well be more dovish than people are expecting. That was another interesting thing that was there. And then you have the Chinese are going to be issuing debt to do infrastructure spending. They're doing monetary stimulus. So all of these things kind of fit into this scenario of um, of just potentially driving money into risk assets. Now, I don't have charts like this in front of me, but I do know, roughly speaking, that there is a vast amount of money in cash of various forms, not just in the United States, but globally. As interest rates come down, and then also these other measures we're seeing, the high amount of negativity. That was very interesting. I look at every now and then I watch Tom Lee on CNBC when he goes on, and he's interesting. He makes a lot of calls aggressively that, I mean, honestly, I don't know what his winning percentage is on some of these, but the key thing to me was interesting was he talked about how everyone is on the sidelines until the election. And we also have been told things like the market always goes down before elections and rallies after. It always goes down in September. But the key point from someone like Tom Lee was a lot of big investment managers think that we are in a recession. A lot of the big investment managers are on the sidelines, and a lot of them are going to wait until after the election to be owning the S&P. So, I mean, that may or may not work out for them. But for me, what is interesting here is we turn to our chart of the S&P, which is also here in this article, more or less. My kind of sense, or the potential possibility I've been kind of looking at, is simply the fact that there is vast money on the sidelines, and we're in a scenario where everything that could go wrong just doesn't seem to be going wrong. Look at this Chinese thing; it comes out of nowhere. Suddenly, this huge new bullish catalyst in the market. Where in some ways, I think people are actually selling American stocks as they're like, "Wow, I suddenly have to be long China, so I better start selling Apple and Nvidia just because I need China." So I think we're in a situation here where things are breaking in a positive direction. Geopolitical situation not blowing up. Instead, let's think about this. If I went back to the beginning of this week and I said, what is going to happen this week from the Middle East? Is it going to be an event that's going to drive up oil, like involving Israel and in Lebanon? Or is it going to be Saudis increasing oil production? I mean, let's really take a step back here. Everyone thought that the risk to oil was going to be to the upside of geopolitical risk and escalation in the Middle East. Instead, we get the opposite. So it's just interesting. In a bull market, everything that should be bad is good, and the same thing in a bear market. So I think we have to realize here the way this news is playing out is just it continues to just stuff the bears, and people who sell end up being in a very weak spot, and there's just not a lot of selling. So I really think it's important to realize that is that nobody, I think, would have expected 72 hours ago that the dominant headline out of the Middle East was the Saudis boosting oil production, and then basically just some more carnage in crude oil. We have been, very much, as I think people know who have watched me, we have looked at the risk to energy again and again. We have warned about increasing production. We've warned about weak demand. And again, what happened? The Saudis increased production. So, and even the Chinese, are they really going to goose that much demand for crude? I mean, let's just take a step back and really assess the situation. I mean, look at crude here. To me, the bigger question really is, does crude, I mean, I'm not an expert on crude. I mean, there's different things with charting it and stuff, but I think we have to, and we can't deny that there is, to a certain extent, here is a weekly chart of this. I mean, do we break down? I mean, that's really I think the question here. And if that happens, then what other like kinds of Goldilocks can be unleashed? So it's not a good idea to be overly bullish or anything like that. And I'm not trying to be overly leaning in one direction, but the fact is that none of these news events are breaking in a negative direction. And when you look out at the most likely thing that is kind of around them, unless something really crazy happens in the Middle East, at this point, we're kind of in a spot where things are breaking continuously in a direction that argues against what Tom Lee said. Meaning, if you're some guy sitting on the sidelines until the election, well, that might be too late. And I think that's actually kind of what comes together in a market like this. So, all right, let me just go through and look at some of the things here in the S&P that I think were important. So, basically, this is this chart we have, and I did a slightly different approach to this, but here's what I noticed. This is historical volatility, and it's interesting how it had this massive spike here, and when the market crashed. But what's interesting is you see the market different times here. This is back, 11 months ago. Hard to believe that time in October. I remember we were talking at the time in this webinar, and we were talking about you know, the kinds of extreme negativity as we spiked off this low. But you can see when volatility comes down and MACD has that thrust, and then it goes into this kind of calm and acceleration. And so there's been 3 times this has happened. This was the other time here in April, MACD having risen, volatility having collapsed, and then continuation. And here we have a similar sort of pattern. So I think this is interesting to kind of see this here. We have also talked a lot about this kind of tight, there's these areas I have in the chart here that are kind of highlighted. Let me actually, I think I can. Let me make this chart bigger. But you can see I put these in these little gray boxes. The market does this recently when it rallies and it stays tight and it does not pull back. So we've seen this, and it basically has happened again. This chart was from yesterday, and you can see we got above the old high from the first half of July, and we held, and now we're accelerating. So, in my view, this move was not triggered by China. This move started last night after Micron reported strong earnings. And to me, I think that's really the big thing we have to go back to here, which is even with all this macro stuff happening globally, let's not forget that the real meat and potatoes of this market remains AI and technology. The Micron numbers confirm the ongoing strength in semiconductors and the demand for semiconductors. Everything about it was constructive on that front. We had done some ideas on TradingView. We had posted back here, for example, on that's oil. Let's just go back to we had been just talking about NVIDIA. We did a TradingView idea when it was stuck in this very tight range. And from my view, to a certain extent, there's points and you simply have to, when you look at things, when things are in trends, part of at least the way I kind of view markets, I think the way a lot of us do is, trusting trends is often something that can kind of give you an edge in the market. And I think here we had a very clear sort of thing where it was making higher lows. Most of these things were still consistent with an uptrend, and it just held and it squeezed and it resolved to the upside. And in many ways, that's just kind of what we're seeing here. At different times, there's just a lot of money kind of on the sidelines. All right, so it's also interesting that Intel, which has been the sick man of the stock market in many ways this year, has all these interesting news reports coming out, people seeing value in Intel and everything else. I'm not sure exactly to make of something like this, but the bigger point again is the things that should go wrong are more or less not going wrong, unless you're like Walgreen Boots or something, which is just, they're one of the few areas of the market and the big names that I can see that are just truly in a bad spot. And if these companies borrowed a bunch of money to buy a bunch of assets that don't have a lot of value, and now guess what? But anyway, that's like one of the few that's out there. So I wanted to now just show a few other things here on this chart. Let's see. If we go back to this, there's so many things happening here. I think it's also here. If we look, I think another thing here is look at the Aussie dollar against the yen. Now, I say this because, there was this whole kind of, scary about the Japanese yen coming out and killing risk assets. But again, this is a good measure of that. The dollar and the yen is a little bit weird because, the dollar in some ways is not a risk asset. But the thing is that the yen has weakened against the Aussie. It's weakened against the euro. And this also tells us that the big crisis isn't happening. And I think that's really a really important thing to realize. Now, I wanted to quickly show you this other little chart, and I'm going to give this to you guys next week because next week is October. I'm going to update the zip file. Remember here that we do have the top of the blog, we have downloads available here. This zip file includes all the things that we're showing in this webinar, actually, except for this because we're going to share it with you next week when we update the zip file. But this shows us is I created an automated trading strategy on TradeStation to look at the NASDAQ and to look at when the 20-day moving average crosses above the 50-day moving average. And what I found was that it has a record of having, historically identifying, upside opportunities for the most part. And it's interesting, even if you look at this one where it had that cross, it rallied good. It ended up to being a loser, but it had, a month and a half or so of strength, after it appeared. But this is interesting because here we have the cross was right here. So now we have that 20 crossed above the 50. And this has been a pattern that's been pretty interesting. So I also think it's important. I'm going to bring up my empty breadth workspace because another thing we were seeing was this is also included in the zip file I shared with you guys. But one thing that was interesting to me is the fact that basically we're seeing more companies in the NASDAQ starting to hit 52-week highs at the same time that the S&P is seeing less involvement in the overall, this kind of breadth in the market. So if we look here, let me just show you very quickly. This is our thing that shows us internals in terms of breadth. And this kind of fits with one of the things I've been saying, which is I am increasingly not believing in traditional measures of breadth. And so what's interesting is if you look in the last almost every time frame, you can see RSP that's equal weighted. It's outperforming in the last 3 months. You can see right here in the 63D, which is 3 months. But if you look on the 42D, it's lagging. On the 21D, it's actually slightly above on the 21. It's actually doing a little bit better because of today, interestingly, with this huge strength in materials and stuff. But for the most part, we had started to see this kind of return back to the NASDAQ. And a lot of these notes I prepared, I'm actually seeing here, it's messed up by this China thing because honestly, it's triggering this strength in materials that is pulling money away from growth. But what's interesting here is look at how the NASDAQ was seeing more 52-week highs. This was starting to trend higher as this happened. So this is showing that the internals of the NASDAQ were getting better at the very same time that the internals of the S&P, what happened? What's wrong? Sorry. All right, here we go. The internals of the S&P were not as good. But again, when the breadth of the S&P is good, what it means is people are buying utilities and consumer staples and these small companies that actually correlate to a pullback in the market. So here's another little thing you can do on TradingView I want to show you. It's fun to sometimes just pull these things up. I can bring up this thing called relative strength, and this compares an index to another index of some kind. So look at the S&P 500. I'm going to modify this really quickly, and I'm going to actually compare the S&P 500 to this special thing you can do. You can do XLK plus XLC plus XLY. And those are like the 3 megacap indexes. All right. And then I'm going to make it into a histogram so it's easier to see. But basically, what I thought was interesting about this is that I showed this before, but it has been accurate. I'm going to change it to a time frame of 21 days, which is a month instead of 50. So the key thing is that when the S&P lags these 3 megacaps, you actually see the market advance. Oops, this is the daily, right? So when the S&P here lags is a period of strength. See back here, the S&P is lagging the mega cap indexes, and these are periods of bad breadth. And then when you see the market basically start to outperform those indexes, I mean, even here, what happened? You basically had a period of sideways, and then as it advanced, you see the mega caps. So this is showing us that the mega caps lead the market. I think we knew that, but it's highlighting it But what's interesting to me here is I had noticed here that the S&P was starting to lag the mega cap combo, the mega cap trio or whatever. So that was just kind of interesting to me. Okay. Now some other things I want to look at was the fact that um, we should remember that at least potentially there's this big strike that could happen in the East Coast ports um, with this longshoreman union that could start on October 1st. So, I mean, who knows how much the market cares about that? Probably be one of those things where the strike might go for 24 or 72 hours and then it goes away. The market will ignore it for the first week. And if it lasts more than a week, then we'll freak out. Who knows? But I want to just remind people that that is an event that's out there and it's starting to get more attention as we get closer. Um, Now, let's take a look at some of the other kind of points I want to make. I mentioned this here, the growth stocks. So we look over on our key ETFs and we can kind of see what we're talking about on our, I'm sorry, on our MT main, go to our key ETFs. You can actually see that in the last week or so. See, this is China is goosing industrials and metals and materials. The materials here outperforming, breaking out. But you can see that we started to see this strength in the consumer discretionary, the communications, and the tech. And I think that was kind of, consistent with what we were talking about. So that's what we mean by, kind of growth coming back. Now, I think we do have to just kind of remember here is, like I said, the big thing that still continues to happen when you look at the micron numbers or anything else is the fact that the AI story remains very much in effect. And this Chinese thing, which is popping up all over the place when you look at different kinds of Chinese things, um, this is now, a kind of just like surge. And it's not to say that it is going to, necessarily be bearish or pull back or anything like that. All I'm saying is that this, a lot of this immediate kind of surge, the big flash, it may for now kind of, be overbought. And I think, the just because this was huge this week doesn't mean that this remains a driving factor. We're going into a new quarter. We start getting in the next month. We're going to get Tesla deliveries. We're going to get the robo taxi event. We're going to start going to earnings season. There are other things that will start emerging. So I want to just kind of remind people that the AI thing remains very much kind of in effect. One of the other things that was, I had some other notes I wanted to mention. Um, there's been a lot of things about the fact that the Blackwell chips are coming out relatively soon. Everything seems to be on track for that to happen. So it's just something to remember here. The name like Nvidia that has not broken out to new highs yet. It's relatively tight here. I'm not exactly sure, what to necessarily make of this at this exact moment, but I think it's important to realize here is that this trend, there's no evidence of it ending. All the most recent evidence we get is that Blackwell is coming. Micron's confirming the AI strength, and then we're going to start getting the iPhone, um, you know, interest in AI. There will be a point when Apple flicks the switch and you have AI on the new iOS and the new iPhone. Again, these are things that they're not exactly clear exactly when they happen. You stay on top of them, but you look out all these events into the future. All of them remain kind of potential positives that are not yet fully realized, and I think that just kind of remains something that's out there. All right. They said, yeah, it was just there was a Morgan Stanley note this week that basically said, um, it just highlighted the kind of the fact that the Blackwell is coming and things are on track and things like that. So some of the things I think were kind of interesting, also was it's interesting. Even look at stock like Netflix today. I don't think it's down for any reason aside from the facts that China's up. This is what I mean, where it's kind of like, oh, here's a stock that's sneaking the new highs and suddenly people take away from there and go to something else. But I think always interesting. Another good example of that is ServiceNow. ServiceNow has been kind of quietly trending higher. We did a trading view idea on it somewhere back here as it was breaking out. And here it is now pulling back to that 21-day exponential moving average. So this overall AI thing remains in effect. So people looking kind of for trends, and you're saying, wow, the Chinese thing is like up, is massively overbought, or materials are overbought, and everything is leaning on one side. Well, there are these other things that are there, and now they hit a 52-week high not that long ago. Oracle also. Let's see about Oracle. These are all kind of fitting into that. Now this one doesn't have nearly as much of an opportunity. Now remember, we have tools built into here. If you go to our price grid, there's something called Keltner pullback. If you look at something like ServiceNow on Keltner pullback, let's look at ServiceNow versus China. All right. So ServiceNow is basically right at the middle of its Keltner channel. That's why it says 54%. And you can see here's the Keltner channel, these dotted lines, and then the midline here is this kind of gray line. Okay, and their service now right at that. Look at China. FXI is basically way above its Keltner channel, and that's why it shows up at something like 200, percent. So we can do things here like, let's just take a look at so like the Nasdaq 100 you know very quickly go to data, import NASDAQ 100, and we can start seeing stocks that are, under, kind of 50-ish. And then you can combine it with other sort of things like it's above moving averages or things like that. But the thing is there are other methods that are out there. A lot of the ideas I kind of had, I'll be totally honest, coming into this, I did not expect this kind of thing happening with China. And I mean, who can really? It's just one of these things. And so you have to kind of take a, kind of just, realize this is a big thing that kind of happened, but then also recognize that, it just might, if you have the bigger trend that you're expecting, in this case, large cap growth and things like that, you get this sort of rotation toward China. People sell a little bit of Nvidia or sell a little bit of NASDAQ to buy some of the Chinese stuff. That can actually give the opportunities in the pullback, like maybe people are not getting in a name like ServiceNow. Also, was interesting to me was it names like, Salesforce.com has been making some interesting news recently. Here it is kind of, pushing against some interesting levels here. This is, near term, maybe kind of overbought, but there's some interesting things starting to happen in a name, I think, like CRM here. If you actually watch, CRM has been making some announcements. Look at it on the weekly chart here. And again, I don't have any exact thoughts on it for this exact moment, but I think the thing is that, you know, what if it does pull back to the 21-day exponential moving average? What if Keltner pullback does go to 50% on this? That, I think, is the sort of thoughts that people might be starting to have right now. Advanced micro devices, same sort of thing. Here it is above the 200-day, above the Keltner channel. But what happens if it goes back under, back inside the Keltner channel? What if it comes back to the 21-day exponential? Will people be interested? And that's kind of where I'm now focusing this, because it's interesting. I drawn that line before and it just kind of broke out right through it. And these are also things where if you look at them on the longer term, I'm not sure exactly at this moment what there is, but when you look at them, these are stocks that are in long-term uptrends. They've had a period of kind of intermediate term weakness, and now that might be starting to turn into something a little bit more favorable. And as we head into a new quarter, a new month, earnings season, and everything else, some of these are now kind of maybe areas that people will come back to. The large cap growth stocks, for the most part, have not been hitting new highs. So the question is simply, as we go into the fourth quarter, as we go into year end, will people start coming back to those? And that's kind of more of the overall kind of question I'm asking here. Yeah, the Chinese thing is a big flash, and it's all this stuff that suddenly jumps up and grabs our attention. But then at the same time, what is the trend, and what is a spot where maybe people will actually, come back to in a way that is more reliable and more clear for people who are looking to do some trend following? Um, yeah, so PCE is in the morning. I'm not even sure how much that matters now. Jerome Powell is going to give some kind of speech on Monday. I'm not sure how much that matters. In my view, here we are not really in a spot where individual news matters as much as the fact that we're in a process of there being a lot of money on the sidelines and not a lot of risk in the market. I mean, not a lot of risk on in the market. The last thing I will mention is about home builders. And you look at the ITB. There has been signs of weakness in this industry. Lennar and DR Horton both had kind of sloppy earnings. These guys have been buying down people's mortgages. It's the same way back 15 years ago, the way GM and Ford, or 20 years, man, I can't believe 20 years ago, they used to, give people incentives to buy cars and all this stuff. And that's what these guys have been doing. They've been paying money to move inventory, and that's never a good sign. And what's interesting now is as mortgage rates come down, we saw huge refinancing activity. We saw a big bunch of new construction recently. But what's interesting is as they start to compete with existing homes, their margins could take a hit because they're already eating margin to sell product. I wanted to point that out because to me here, I think we have to realize that this thing with the home builders is kind of something that is kind of brewing there. So anyway, we'll be back on Monday in the state of the market. It's great to see everyone and to talk to folks. I hope you guys have a great day and a great weekend, and I'll see you soon.